Good morning, everybody. How are we all doing? This is Monday, March 6th. Let's get a quick audio check 1 2. Audio check 1 2. How's the robo voice doing? Hopefully, we've avoided that this morning. But let's dive into what we've got on tap for the day. Right? We are going to jump right into our economic calendar here. What are we seeing? Certainly nothing on today's session. Really, fine. No volatility, no nothing, no big headlines this morning, nothing. Here's Monday, March 6th. Tomorrow, things will start to get interesting with the first day of Jerome Powell's testimony starting at 10 o'clock. So be prepared for a little bit of volatility around the 10 o'clock time frame. We might expect, he's probably going to come out and say the things that he always says. It's his testimony on the Fed's policy, right? It's not about, hey, this is the decision for the upcoming meeting. Now, there might be some dovish or hawkish undertones to how he presents himself. However, that's not the point of the meeting, right? The point of the meeting is very likely, like what I would imagine, is he comes out and he says, yeah, we have a dual mandate. Our first priority is to get inflation to 2% and hold it there, restore price stability, and then also enforce maximum employment. Right? That's usually what he says every single time. I wouldn't expect anything different this time around, but again, the market might be a little sensitive to if there is a hawkish undertone to anything going on, or maybe if there's, more of a dovish undertone going on. We don't know. We don't know yet, but that's just something to be mindful of. Tuesday kicking off at 10 a.m. We'll get a continuation of his testimony on Wednesday at 10 a.m. That's after 8:15 NFPs from ADP, so that's usually the preview number. And we are expecting some job growth here, 195 versus 106 on the previous. So if we come in at the forecast, then again, that's a pretty substantial amount of jobs added to the economy. It would not be a sign of recession by any stretch of the imagination. And then we'll get JOLTS as well at 10 a.m. as Powell is testifying here. Okay, so JOLTS is coming down, 10.6 million versus 11 million prior. Remember that there were roughly, I forget if this number has changed dramatically, but there were roughly 2 job openings for every unemployed person for quite some time. The further this number comes back down, the tighter the labor market gets, the more satisfied Jerome Powell sort of is, right? So anyways, that's what's going on there. On Thursday, just to be mindful of what's going on, unemployment claims at 8:30 as always, but the big deal is really Friday. That's where we get all the heavy-hitting jobs data, hourly earnings month over month, the true NFP number, and the unemployment rate. Once again, 3.4, historically low readings. Historically low readings. Not a sign of recession by any stretch of the imagination. When and if it starts to spiral out of control in the upward direction, usually that's when we start to say, okay, something not great is going on here. So if we come in at the expectations, unemployment and overall employment as a concept for the health of the economy doesn't seem to me to be a big deal. Recall also that this is just going to cause volatility. We're not positioning early for these numbers to come out on Thursday's close, right? If you want to play that game, if you want to play the gambling game and you want to spin the dice or roll the dice, then be my guest, but that would not be a priority of mine. Would not be a priority of mine. All right, so that's the economic calendar for the week. As we move forward through this week's pre-market live stream, we'll just kind of glance through this now that we've covered it kind of in full with a majority of the folks here in the chat. Continuing along, let's see what we have for stock-specific headlines this morning. The big headline is stock futures are little changed as investors look ahead to Powell's comments, jobs data this week. That's what we just talked about. As Apple rumors swirl, Chinese rivals launch formidable smartphones to challenge Samsung. Interesting. This thing looks like a square. Whatever this thing is right in the center. Looks like a square. Not sure I would want a square in my pocket there. Anyhow, continuing along, we are looking at more positive news for Meta if the ban of TikTok can go through eventually. Scrolling on down, Goldman Sachs gives Apple an upgrade here, saying that the stock can rally more than 30% thanks to the service business. Salesforce faces an underappreciated risk, platform customers jumping ship like Viva. An interesting thing as well that, remember a while back, or it wasn't really a while back, but maybe a week or two ago now, I said that I would read Warren Buffett's annual letter to shareholders. Just in terms of companies identifying risks, right? This kind of spurred that thought. One of the big risks that Warren Buffett identified in his letter to shareholders, his annual letter there, was he thinks and continues to think, this has been his line of thinking for quite some time, that cybersecurity threats are the biggest and underestimated risk to all technology companies, even industrial companies, like anything that uses tech, basically any company out there. Huge threat. Cybersecurity continues to be like the number one priority for him. He sees that as something that terrorist organizations can and will attack as the sort of capacity for that increases, right, as technology spreads further and further around the world. And he sees it as a big risk, which no one else seems to comment about in their filings. But anyways, that just sparked my thought process with that. It doesn't really mean that we should do anything specific right now around cybersecurity. If you're a believer in the space, then maybe you look at stocks like CrowdStrike or, Datadog or something like that. Right. There's probably other way better ones that I'm not mentioning, but you get the idea. What else do we see here? Air fryer boom to grow sales from Nestle and Tyson. Some more Apple headlines here about mixed reality. Another train derailing in Ohio. No toxins aboard on this one. That's interesting. Sort of a bad record for that rail line right now. Autonomous vehicle stuff is deep underwater. What else do we see here? Let's see. We're looking for stock-specific headlines. Stock-specific, anything that we're seeing? Not really. And that's it. That's it. A couple of Apple headlines this morning. Some stuff about Salesforce. CRM is the ticker on that one. That's really it. Nothing crazy here. Train derailment, futures unchanged. Maybe some positive stuff for Meta. And Apple dominating the headlines this morning. Let's take a look at the earnings calendar. What do we see from this perspective? This week, are we going to get any heavy hitters? Nothing crazy. I wouldn't say anything crazy here. Monday, nothing before the open. Lordstown, if you want to get your popcorn out, watch some EV stuff. After the close, nothing really strikes me as incredibly important here as well. A lot of folks were trading C Limited as it was on that parabolic run throughout the sickness recovery, so to speak. And maybe that's worth keeping an eye on, but right now it's back down. And I don't want to call it Pennyland, but it's certainly not a reasonable stock to be trading options on, unless you're taking like hundreds of contracts at a time, whatever. Squarespace is worth watching. Ticker SQ, of course. That's where I would keep my eyes. After the close, we just mentioned CrowdStrike, right? There it is, cybersecurity. So keeping an eye on that one after the close. Campbell's before the open on Wednesday. You might watch Unify as well. And after the close, MongoDB, don't get me wrong, in the tech space, it's definitely a player, but from an earnings perspective, wouldn't be my first choice to trade something like that. Thursday, JD, BJ's maybe from a consumer spending perspective. It's really it before the open. Build-A-Bear if you're into that at the very bottom. After the close, we're going to get Ulta and DocuSign. Those are some decently heavy hitters. Ulta is priced at a solid price point, and DocuSign, of course, as we know, has been an interesting trader throughout a majority of the move there, the past bit, as everything went digital, right? Oracle as well, sneaking in there underneath Gap. Friday as of the close, nothing. Before the open, nothing. So anything in a box might be worth paying attention to. If I had to just narrow it down to 2 or 3, it would be CrowdStrike and it would be DocuSign. That's probably where I would keep my focus. Maybe Oracle. Those would be the 3. All right, that would be my 3. All right, let's do what we do best. We're going to move on over to the platform here. This is Thinkorswim, and we're going to dive into our ES futures, and we'll see that on the 4-hour time frame chart, this is a counter trend move in the context of a downtrend. That'll be the main topic of discussion as we get started in the ES futures on our 4-hour time frame chart. But before we get started, let's jump on over to the chat and see who is here. Kicking us off strong is none other than John Cardozo. Thanks for joining us this morning. Thanks for kicking us off with a good morning. K-West funded traders in the building. INF the based homie Roger Tutt, Davey Day Trader, J. Roldan Tax Services LLC. It's tax season. I got to go drop off my paperwork. I'm behind. But anyways, looking forward to doing that possibly today or tomorrow. Luke B, Steve Valois, Ryan Speed is in the building. We've got George, Ketchup Kings, and Rando, Stevie J, Lou, DP, K DeLeon, Chris Carras, Kyle Stearns, classic around the channel. Thanks for tuning in, Kyle. We've got Thayer, Tunes. We've got Farah, May, Justin Storm, Dwayne, Carlos, Jim, Lloyd. We've got Justin, Mona Makes Mora, Austin, Sharath, Chris C, Ronald. Who else? Black Diamond off the grid. Good morning to you. We've got Michael. We've got Ike Wells, Siege. We've We've got Rebecca F., Killer Herb, Christina Ann, David Bell, Tony, Loki, Mickey, Cipriano, Victor Y, Swipe. I think we got Swipe already. Going to look for some green names now here, folks. So Starlight, Taking Profits, The Sandman, Thule J with the gold cash bag, Willow Puff. We've got Audi 8, Brian Scott, Miami Beach Broker. David Ball, thanks for joining as a new supporter. Appreciate that. Bluefish Aquariums is in the building. We've got Infornity. And that's it for green names so far. So thank you all for tuning in. Thank you all for being here. Let's get started with our 4-hour time frame ES analysis. What do we see in front of us? Once again, in the context of an overall new downtrend that was forming here, this is a counter trend rally. Why can we say that? Well, we've got highs, lower highs, and this reasonably could be a lower high from here to here on the 4-hour time frame chart. We know that if we're counting lows, we have lows, lower lows, kind of equal to lower-ish lows here, but undoubtedly lower low, and lower low. So because we're coming off of a lower low, because there's still a strong opportunity for a lower high underneath overhead structure here, we're not out of the woods from a downtrend perspective on the 4-hour time frame chart. Don't get me wrong, this has been a face-ripping rally over the past, Thursday and Friday sessions, but it's still just a counter trend rally until we can really get some price acceptance above the bottom of the prior range here, which is much closer to 40.60. All right, so just keep that in the back of your mind as we start trading throughout today's session. We're so far experiencing a counter trend rally into a known area of resistance, and that's that. So that's the 4-hour time frame chart. Not completely flipping to the bull side just yet. If we move on down to the hourly time frame chart, though, this is where things start to get a little bit different. It would be hard to say that this is just a straight-up downtrend. Note from here to here. Absolutely, don't get me wrong. That is a downtrend. But with this reversal, it's a bit more on the hourly time frame chart of a reversal, exactly that. It's not so much just a counter trend rally, right? If we're going to keep up this phenomenon of highs, lower highs, lower highs, lower highs, lower highs, we've broken that. We have broken the lower high phenomenon. Now, you might make the argument, well, it's a lower high from here to here. Well, I would say go back up to the 4-hour chart, and now you're talking. But for now, we've broken that phenomenon of lower highs, and we've also, if we're counting our lows, right, lower lows along the way, there's a clear opportunity that even if the market sees an aggressive pullback and retraces everything from Friday's session, finds support here, there's at least the opportunity for a higher low to form on the hourly time frame chart. So the hourly chart is not so clear. It's definitely starting to reverse in the upward direction, obviously, with this most recent leg up. But would I want to long it right here? Probably not, based on what we just discussed on the highest time frame, the 4-hour, that we were considering. We're coming into a possible area of resistance at the bottom of the prior overhead supply. That'll be the main tension point for this morning's session, and really figuring out how do we resolve this area. Do we resolve it higher into that balance, lower for a pullback? In which case, 4-hour would of course remain in the bear direction with a lower high, but the hourly, now the consideration is, can we find a higher low, somewhere above 4,000, right? So funny enough, just like we were talking about the tension on the weekly watches videos between the weekly time frame charts as well as the daily time frame charts, now we're looking at tension between the 4-hour and the 1-hour, right? 1-hour is trying to flip into an uptrend. The 4-hour is still offering the potential for a downtrend. And as I'm speaking to you, we are getting a little bit more of an aggressive push through this high here. We'll adjust that overnight high in just a moment. Anyways, let's go ahead and take a look at the 15-minute time frame chart, continuing on lower through our time frames here. And it's quite clear, obviously, like without exception, the 15-minute chart very much so in an uptrend, right? We've got lows, and I get it. These are happening in the pre-market, but we've also got highs, higher highs, and trying to make higher highs as we're speaking. Okay, so all things considered, 15-minute chart is definitely the most bullish time frame, especially when we're only isolating the past 2 or 3 days of price action. It strikes me that the overnight high is completely misplaced, so let's put that to its rightful position up there, and we will start walking through our 3 questions that we always ask to give ourselves a sense of what should be taking place on this morning's open. So just making this a little bit easier on the eyes, giving ourselves some drawing space on the right. Good. Question number 1, where are we opening in relationship to the prior day's range? Are we in or out of range? Here's the prior high of day. Here is the prior low of day, and we are currently opening above your prior high of day here, which is definitely putting us on a gap up for this morning session. So that's definitely more bullish than bearish. However, it does mean that gap rules will be in play. It does mean that there should be some shock and awe on the open. It does mean that we have the opportunity for early morning trade as opposed to having to be patient and wait for some sort of opening range to develop. So question number one, bullish, but we know from the gap rules we're primarily looking for a fade first. Question number two, what is the overnight range telling us? Where are we in that perspective? So here's the overnight high, here is the overnight low. We're opening, for all intents and purposes, right on the overnight high, which is, once again, definitely more bullish than bearish from a location perspective, but most importantly, sets up decent risk reward for our gap rules with a stop over the high if we can fail there to close the gap and target the prior high of day. We'll talk about gap rules in just a moment, but question number two looks promising for the risk reward side of things. Question number three, last but certainly not least, what is the overnight inventory position, net long, net short? To do that, you just extrapolate the settling price from the prior day's session. Here it is, right around there. Same thing as saying the closing print, how much time was spent below versus above. It's fairly balanced. I would say that there's a decent amount of balance here. Some activity underneath, some above, some back beneath, and now some more back above. You might make the argument that there's a slight edge on the net bull side, so we'll say something like 65% maybe net long. 65% net long. I'll put an L here for long, which is telling us that, yeah, there should be some shock and awe on the open, but there's no massive imbalance of the overnight inventory, right? It's not like we have 100% net long and the inventory is majorly skewed in one particular direction. It is decently balanced with some activity underneath. Again, don't get me wrong, in this most recent push higher here, without reasonable pullback, it's getting more and more net long, so that is important for question number one. All right, so the three questions, what do they tell us about the morning? Well, as we were alluding to just a second ago, gap rules will be in place. So GR is in place. Gap rules, if you don't know, tell us a number of things. Number one, they're in play. Number two, risk reward is decent right now. Number three, there's some skew to the net long side, but it's not 100%. So although rules are in play, manage your expectations, right? So let's get down to business. What are the gap rules here? Let's clear up that drawing set, and here we go. Gap rules would tell us that if we take out the overnight high and fail to accept above the overnight high, aka rotate back underneath, we are looking for a short-sided trade underneath the opening print to close the gap and test the prior high of day. When and if we get there, 40.52, 40.53 area, we're looking for a reversal back in the upward direction. That is a gap fill reversal. So just to walk through the steps and be very clear about this, number one, we need to fail, so I'll put F, ONH. That's not F off ONH, that's fail the overnight high. All right, we need to get back down underneath the overnight high. Number two is that we need to B, break the opening print, OP. Opening print, get down underneath it. That starts to indicate a short as well. Number three, target, TG here, is YHOD, prior high of day. We are tagging up, repairing the structure. Number four is that we are then looking for GFR. This is not a GoFundMe refund. This is a gap fill reversal. Boom. Okay? So those are the four things that are always in play off of any gap all the time, no matter what the situation is. You need to be consistent in applying those rules, and if you're not, you're going to get caught in a downward spiral. Trust me, we've talked about it on the channel a number of times. You don't want to be inconsistent with that application. Anyways, so those are the four things we're looking at on the open. To give you the numbers, the overnight high, just for those of you who are maybe in a car, can't see this, the stream's too small, whatever. Overnight high, 40.6375. 40, let's just round up there. Let's call it 40.64 right now in the pre-market. As long as we're underneath 40.64, step one is complete. If you're underneath the opening print, which is currently slated to be around 40.6225, that is subject to change. Obviously, the market's got about 40 minutes to go until the open. If we're underneath 40.62, you're also good to go with shorts. Our target there is the prior high of day, 40.53 we'll round up to, since technically it's 72-ish. All right, so your job is to just find a risk-reward setup where you're not risking more than the possible reward on a 2x basis, right? You need to find a 2-to-1 risk-reward ratio there to get involved on this particular short. So does that mean that we, need to see a very shallow pop of the overnight high and then a failure through the open? Probably, right? You need to set up something that looks like this for that trade to be worth it. You can't really afford to have something that does this and then do this, right? You can't have stop that's there and then reward that's here. Okay, so We know that the gap probably wants to fade. We know that we are looking to participate in that fade, but we just need a decent risk-reward setup. Therefore, we can't really afford to take out the overnight high in a significant fashion, then fail back down underneath soon thereafter. Now, if there's a lower high pop, something that looks like this, and then we flush the open, great. Now you've got a pattern working for you as well. You've got more of a descending triangle, right? You're looking for the gap close there. It's a different story. Then you could place your stop on the other side of the resistance trend line. So there's a number of different scenarios. Again, we can't cover them all here on the pre-market prep. There's almost, it's like a game of chess. As soon as you get past the first 5 opening moves or 3 opening moves, I think it is, there are almost infinite opportunities for a number of different games to unfold every single time. Anyways, that is the gap rules. Now, I also want to point out a couple of things from the market profile perspective. So I'm just going to bring back up, I think I can do this. Yep, there we go. This screen over here, and we'll move on over to our market profile on the ES side of things. And we just want to show you that overall, and this was a comment that was made on the weekly watch this video that came out yesterday afternoon, right? Where was the value area from Friday? It was definitely lower in the Friday range if you're just looking at it in isolation, and so was the point of control. So I know this is a fact too. All of the macro bears out there, the people who are like, earnings are an absolute disaster, the Fed's going to come out, they're going to crush the market, whatever. The macro bears are going to be all up in arms and starting to get giddy if we start to see a pullback. But I want you to be aware, because you're tuning into this stream, that if we come in and we tag this point of control, could be around 40-20-ish, this general zone where the point of control is, and start to put in a reversal off of it, you know darn well that on the hourly time frame chart, we're searching for a higher low. You know darn well we're searching for a higher low if we get support and a clear turn off of like 40-20, 40-18 in the ES. All right, so if the macro bears start cheering and hoopla and this, that, the other thing, the market's going to zero on some sort of pullback here, we start to move back down into Friday's range, I would not give them the benefit of the doubt until there's a clear violation of Friday's range overall. We'll talk about that level in just a second back on the hourly time frame chart. But if we support anywhere around 40-18, this could be a relevant level for today's session, right? This is where we know it makes sense to tag up from a volume perspective. And if we start to turn there in a significant way, there's your hourly higher low. Okay? So that's the comment about the point of control. That's the comment about a deeper pullback if we get one here for our ES on today's session. 40-20, once again, you can see here, is basically tagging up to this breakout level. Here was your morning, back and forth, boom. It's kind of what sent markets higher, right? So tagging up to that breakout level, not the end of the world. Not the end of the world. Okay, so once again, gap fill reversal, primary situation. If we start to just aggressively move higher, there's no move underneath the overnight high. There's no short for the gap fill, right? You're possibly looking to get involved on higher low pullbacks above an upward sloping VWAP or something like that. And if we fall back down into the prior day's range, I would it might be reasonable to look for an intraday scalp underneath the overnight low to tag up to this area here, right? We know that we've got fairly thin structure through that zone, so it would be reasonable to try to capture a 4-hour, right, lower high off of this zone, this gray bar that we're talking about. 4-hour lower high, you could trade that as a scalp entry, looking for your point of control target, take off a bulk of the position here, and then say, okay, if we start to bounce, I'll trail that stop lower protectively, and then I'll flip to the long side maybe. Or if we just lower high off of it and break through, reevaluate. Maybe this is a more important 4-hour lower high. All right, so that's the main game plan, at least for me, on today's session. Just to recap, what I'm watching for, situation number 1, if I had to rank order these things in terms of what I want the market to do, I would love for the market to do this. That is always the first and primary situation when we're opening on a gap. Gap fades, closes, and then we reverse off of the gap fill. Number 2 situation that I would love to see is a pullback here, support, and then something that's a higher low back above the prior high of day, just because that is trading with the trend, that is trading with the momentum of the 15-minute chart and the hourly time frame chart as well. All right, that's number 2. Number 3, which I would like to see also, would be here, lower high, and then a breakdown, targets 40-20. That would be the downside move I would look to catch. Okay, so shorting through the equal low, targeting this, retracement of the thin structure here. Okay, that's the short setup. And number 4, what I really don't want to see happen, just because I don't think it's very tradable, is if this does just start to break and continue, very, very difficult to chase that up at the highs. You're along with the worst possible location on the highest high, right? On the highest high sequence that we've just created, you are trying to long this up here. No thanks. Where are you placing your stop loss? Maybe underneath an upward sloping VWAP, as we just pointed out. But to me, that is so far down on the totem pole of things that I would like to see. If it just starts to break and continue, I'm letting it go. I will refuse to chase a higher high long, especially if there's no good risk reward. Okay? That's that. So if I had to rank order the situations, that's what I would say. Let's go ahead and take our official YouTube poll, then we'll go back out to the hourly chart, and I'll show you where the levels change, and this becomes a significant lower high, 4 hour, and things break down, right? That's if we don't hold 40-20 on the pullback and the macro bears get all excited. So anyways, if you are bullish on today's session, thinking that we go gap fill, reversal, then continuation, some sort of risk reward is set up here. You're a bull, you're thinking that we move higher, the momentum continues. Let's see a number 1 in the chat. If you're a little bit more neutral, thinking that we possibly fall into the prior day's range, support off the overnight low, do something like this, a bit more constructive, but ultimately, it's not big continuation, just in the upward direction. It's a bit more sideways on today's session. Let's see a number 2 in the chat. That is our neutral outcome. And then, of course, the bears want to see this, lower high off of 40-20 and continue to just fall like a hot knife through butter. That's the number 3 bearish situation, which once again, I personally can't see it as of right now. Who knows? The market will always do whatever it wants to do, but from a probabilities perspective, it doesn't sit high up on the list that we were just pointing out. If you've got no idea what's going to unfold on this morning session, a number 4 will suffice, and we can go from there. I'm going to type in the official clickable YouTube poll and see what's going on with our lurkers, those folks who are not comfortable speaking up. So what do you think? Which we appreciate the lurkers, by the way. Like, this is not a comment about lurkers. This is showing appreciation and allowing accessibility for lurkers, right? So everything's all about accessibility these days, and I think we're doing a good job. We're trying to do our part there with accessibility standards. So neutral, bear, and we'll also go with number 4 as ostrich. All right. Official poll is out there in the world, and that's looking good. Now is also a great time for me to just offer in the small reminder that if you found value in the stream thus far in the breakdown of the ES, all the things that we've looked at, do me a favor and just hit the thumbs up button. We've got about 750 people in here, only about 100 and something likes. That ratio is quite skewed if you ask me, but what do I know, right? Anyways, scrolling up to the top of our results where the numbers start flowing in. Any questions, comments, concerns? Is the value area high correct from Ann Rando? Yes, as far as I know, value area high is correct. I'm going off of a 4. Here's the thing. I'm going off of a 4 p.m. close. 4 p.m. close on the ES for the value area high. I'm not including the 4:15 session. Okay, so that could be skewing where your value area high is versus mine. So yes, it is correct. All right, with that, we're into some poll results. There weren't really any other questions, so let's dive into it. Lots of 1s and 2s early on in the chat, which make total sense. 2s. Lots of 1s and 2s. A couple of 4s actually sprinkled in there today. Some uncertainty, it seems. But as I get deeper through the list, I'm seeing way more 2s. Way more 2s on today's session as opposed to any other chat response, it could be reasonable, right? The reason I would say a number 2 is certainly reasonable today is because, as we've pointed out, we've seen a face-ripping rally to the upside. We're sitting right on the higher high. Right? So to just get blatant continuation in the upward direction may be tough. The market may need to consolidate this move. It may need to go sideways. It may need to digest. We may need to look for that hourly higher low that we were just discussing. So I'm actually quite on board with the number 2 situation in terms of the thinking behind the market's move today. So lots of 2s. As we get deeper through the list, we don't see a big flip over to 3s here. And that's that. So the official clickable YouTube poll as well is sitting at 49% response rate for number 2. Which is obviously could you call that a super majority? I don't know. It's definitely a majority considering that all you need is 25%, obviously, not to insult anyone's intelligence, on a 4-option poll. So anyhow, the chat is feeling neutral. The chat is feeling like we consolidate. The chat is feeling like it might be a difficult day to get some trending activity, and I don't blame you. So that's the interpretation of the ES. Now let's quickly go up to the hourly time frame chart. And I just want to show you at a quick glance where I would start to say, okay, all right, macro bears, you got to pull back. Great, things are going well. So be it. If the macro bears can get prices back down to the prior low of day and then put in a lower high underneath 40-20, this is where I would think on the hourly chart specifically, okay, 4-hour trend remains supreme, lower high, short through the equal low, back down to the equal low here, 4-hour equal low break, great, trend continues. Why is that the thought process? Hopefully you can see it now that we're on the hourly time frame chart. But if this were to take place, this represents clearly a lower high somewhere inside of the balance area, right? Inside of this balance area on the hourly time frame chart. It also represents a lower high underneath that point of control pivot and breakout point that we just discussed on the 15-minute as well as the market profile, right? So if the bears get something that looks like this, I will concede and I will say yes. Higher time frame reigns supreme, hourly chart is flipped back to bearish, and we will trade it in the downward direction. All right, but until that actually happens, it's pretty tough to say bearish if we're above 40.20. All right, so that is the last comment I will make about the ES. 9 o'clock on the money. Let's get going with the NQ. What's going on with our NASDAQ? 4-hour time frame chart, extremely similar. Overall downtrend, counter trend rally, a little bit more significant though, because we have recaptured the bottom of the balance, right? We are inside of, well, it depends on how you split it. You could call this the balance, you could call this the balance here. Depends on how you split the pieces of the puzzle. But overall, a little bit more significant than the ES. We know that. The ES is clearly just sitting here or maybe even slightly underneath, whereas the NASDAQ is above. So relative strength in the NASDAQ, if you're looking for longs, this might be the place to do it because of that. Overall, the downtrend on the 4-hour chart is still intact, lower highs, right? Still an opportunity for a lower high from here to here. And we are coming off of a lower low, right? So this is still a counter trend rally in the context of the 4-hour time frame chart, just like the ES. And if we move on down to the hourly time frame chart, things are not so clear once again. There's the balance range. Recall that we had sort of a downtrend going on here, but now with lows, higher lows, trying to find higher lows. We've got highs, higher highs, well above all of the highs from in this box here. It's, it's definitely not a downtrend anymore on the hourly time frame chart, which is what we were just discussing on the last ES comment as well. So NASDAQ still in that competition of time frames here. Let's go to the 15. Make a quick evaluation of what's going on with the smaller time frame. All the three questions are extremely similar. Here's the prior day's range. Obviously, we're opening on a gap up. We're opening extremely close to the overnight high. Overnight inventory is fairly balanced. If we just extrapolate the settle, it's actually slightly more net long in the NASDAQ now that I'm looking at it here. Much more time was spent above throughout this time period here, and obviously with this most recent push. So definitely more net long in the NQs, which means that the gap fill is definitely, I don't want to say more so in play, but the odds of it reversing, the odds of longs who are trapped up here reversing, definitely a bit stronger than what we just saw in the ES. So gap rules are in place. I'll just cover them very briefly. We want to see a failure of the overnight high. That number is 12,378. Failing through that and moving down underneath the opening print, wherever that may be, currently sitting at 12,366. We're looking for a rotation to the prior high of day, 12,323. And then a reversal back to the opening print, monitoring for continuation in the upward direction. That's the gap fill reversal. That's always primary situation number one from a rank ordering perspective. If we just get blatant continuation, just like the ES, very difficult to play this long considering we've just made higher highs and you're longing at the worst possible trade location. If it does continue, you got to be patient on that and wait for a pullback to VWAP or some sort of consolidation, something. You need some place to place a stop loss. If we fall further back down into the prior day's range, just like in the ES, the point of control is, I believe it's actually in here. I believe so. Let me double check. Let me not speak sideways out of the corner of my mouth. Let's go to the NQ market profile. Yes, it is. It is lower. NQ point of control is closer to, let's round that off to 12,195. 12,195 in the NQ, 12,195 is right around in the bulk of this consolidation. So if we do get a deeper pullback, so let's say the market does something like this, I would look for a short scalp. Remember that this is a scalp, a short scalp to come into this 12,195 area. That could be a tradable short on today's session. Remember, you are not overstaying your welcome. You are not a macro bear. You are not thinking that this market goes to zero. You are just looking for a scalp in the downward direction for a pullback offering a higher low on the hourly and 15-minute trends. All right. If it turns into more than that, just like in the ES, if we get a lower high underneath, okay, let's reconsider if we get a lower high underneath that level here, that point of control. Then it's no longer really just a higher low pullback on the hourly and the 15. It's starting to become more of a reversal. Okay. So I would say, if anything, key pivots today, like just lines in the sand for traders who are just watching big zones, big areas. Do I need to maintain a bullish stance, bearish stance, whatever? 12,200. Like, let's just round off, make easy numbers here. 12,200. If we're above that, bulls are still on parade. They're in control, getting a reasonable pullback or continuation. If we start to fail underneath, all right, things could possibly change. We'll leave it off at that in the NQ. All right, let's move along and take a look at the RUT. RTY is the ticker there, of course, /RTY. Russell is our risk gauge, risk barometer, if you will. Love that word, barometer. Anyways, 4-hour time frame chart isn't so clear. This is definitely a downtrend here, but more recently it's flipped to neutral. I'm not going to call this a 4-hour uptrend yet because we do not have the higher low that's required to call this an uptrend. But if we think about this zone, it never made a lower low specifically on the Thursday session, and now we're making a higher high outside of the range here. So it's definitely neutral, trying to flip bullish, but we're not all the way there yet. We need a higher low pullback to confirm before we can definitively say that this 4-hour downtrend is over. Right now we're neutral. We're looking for a higher low, any excuse for this to flip into an uptrend. If it's going to remain in a downtrend, bears need to send it to the equal low. Reason being, of course, is because from here to here we have the higher high. If you're going to count this as highs, lower highs, which is definitely valid, don't get me wrong, you're not really shorting this lower high because you have this on the hourly, right? Break and retest the top of the range here. We've already flipped into a neutral trend with a higher high. For this to be, the count, high, lower high, you need to be at the equal low looking for that flush, and that's where the bears regain control of the trend, okay? So I know they may not want to hear that. I know they may be saying, no, there's still a lower high here. Short this thing into the ground. It may be true. It may be that the market completely rolls over here, dusts the low, continues in the downward direction. However, from a planning perspective, from a trend perspective, how could you not be cognizant that we have recaptured the top of this balance here and we are above this prior low as well? You could easily make the case for this in the opposite direction, which once again is why we're saying that this is a neutral 4-hour trend. It's not bullish yet. I'm not making the argument that it's bullish. I just don't want the bears to be attached to downside outcomes if we've currently made a higher high and we are not near the equal lows. It's a bit of a stretch to assume that this is automatically going to be your lower high. Okay? So once again, not picking sides. This is as neutral as it gets in the Russell. Let's take a look at the hourly chart. And this is good to know because the Russell flipping neutral here as the other charts had remained bearish, right, was kind of the indication, right? The Russell never made that lower low. We've been talking about the Russell acting as a leader for quite some time on the channel, as the bottom was formed in October, as the rally commenced off of that low early this year, the whole 9 yards. It's doing its job. It's doing its job. So I would not want to be caught on the wrong side of the rut. Anyways, hourly time frame chart, definitely in more of an uptrend, right? If we isolate the price action, take a more nuanced view, we've got these lows. Oops, whoa, that is a bit too nuanced of a view. Apologies for the mega zoom there. Let's try that one more time. Here we go. Taking that more nuanced approach, there's the balance. Here's the low. Here's the higher low. Here's a higher low. Pre-market, we're getting the higher low. Remember that the pre-market sessions really don't count for, you're not going to hang your hat on the pre-market low, right? But above the top of the balance, the pullback would be, let's not do that zoom again. The pullback would be here and here. I mean, that's quite obvious. 1920 is kind of your area from the higher time frame perspective. Let's move on down to the 15-minute chart. And obviously 15, strong uptrend, lower left, upper right. Morning pullback, extreme rally. Point of control was left lower in here, I do believe. Once again, I don't want to talk sideways out of my mouth. So here's the Russell. I stand corrected. Yeah, I stand corrected. Good thing I double checked because that would have been embarrassing. Although, you could make the argument that we've just got a double distribution here and here. I mean, it's not really an argument. It's a fact. We have a double distribution. And the point of control from the lower distribution is undoubtedly closer to 1911. But anyways, the most volume, if we're just counting this as one day, is definitely up towards the highs, which is noteworthy, right? Price was accepting these higher prices instead of rejecting and leaving point of control lower. Anyways, what would that tell us about the market and the expectations for the open here? Well, ideally, instead of seeing a breakdown of the overnight low to short to a point of control, you just want to see consolidation up here, which remains as bullish as it gets, basically. No gap in the Russell as of right now. We're opening underneath the prior high of day. Gap rules are not in play. But once again, the bulls just want to see optimal consolidation in the overnight range, then get continuation in the upward direction. If we do pull back, it's all about holding 1920, right? Retrace the thin structure that's here. Find support 1920, 1918, this general zone right in here. We just saw that on the hourly time frame chart as the top of the balance range from this area right here. Okay? That is the Russell. That's going to keep us risk on. As long as we're above this balance, we are risk on in this market. If we poke back down into the balance, time to reevaluate. We're just trading the charts in front of us. Folks, We are just trading the chart that is in front of us. We are not integrating any macro themes. We are not saying that Jerome Powell is going to come out and he is going to crash the market on Tuesday when he starts his testimony. We are not saying that JOLTS is going to come in extremely hot and it's going to be interpreted as a hawkish data point. I mean, forget about it. Just trade the chart in front of you. It's nice to know what's going on and justify the moves with fundamental explanations. Everybody, the human brain's a funny thing. It always wants an explanation of what's going on in the charts, which is why I've started including the fundamental narratives in the weekly watch list videos, because folks really, really enjoy having an excuse for why price did what it did. But at the end of the day, if you're a day trader, if you're a scalper, if you're taking trades that last anywhere between, it could be 5 minutes and it could be all the way up to, let's say, 4 hours. If that's your time frame for trading, if you are a 5-minute scalper or a 4-hour intraday, day time frame trader, guess what? You don't care about what the JOLTS and what the Fed is doing. It might be nice to know from a narrative perspective, but at the end of the day, it's not going to impact your trade. Your trade is impacted and dictated by, did we break a level and where can I place my stop loss? If we broke a level and I have a clear stop and a target that's at least 3x my risk, then guess what? I'm taking the trade. Doesn't matter what Jerome Powell has to say. I'm mindful that it might cause volatility, but that's that. All right, that is it. All right, enough of that. Let's move along to the cash ETFs and see what's going on from this perspective over on this screen. Let's get you folks some levels in the ETFs. I know everybody enjoys the SPY, Qs, and IWM. Not so much the IWM, but definitely SPY and Qs. So what are the numbers? What are the levels here in the SPY? Well, we're certainly opening on the same gap up that we just saw in the futures. The numbers to watch, prior high of day is going to be your 404.50, which recall is also the bottom of the balance right here. Hey, excuse me. I was about to say Tony Price, who I know is in the chat somewhere, but Taking Profits, thanks so much for the 10. Greatly appreciated. Thanks for being here. Thanks for supporting the channel. That one's definitely going into the coffee fund. Appreciate you. John Smith, I hope you weren't short on Friday. Just, all the folks know. You folks know. Those who know. John Smith, hope you weren't short on Friday. I know you said at 10 to 10:30 you were going short. You were bearish as FK, as you put in the chat. I hope you didn't do that. Anyways, regardless, yeah, the latte fund. Yes. Let's get back to business here. SPY pre-market chart here. The key level to hold is 404.50, right? If we're above that, we're back inside of the overhead balance here. It's a step in the right direction for bulls. Higher lows above start to get more interesting. That represents your gap fill reversal, bullish, structural, all that good stuff. What is slightly concerning, again, is the fact that we're coming from a lower low, straight shot into resistance, and we have just produced a higher high on these different time frame charts. I'm not going to reevaluate or reiterate the same psychology we just discussed in the ES, but you get the gist. It's pretty tough to be a new money long here chasing this in the upward direction. So ideal pullbacks in your SPY want to hold the top of the breakout zone from here, 401.50. 401.50 could be a very reasonable pullback. I would also make the argument that from the daily time frame chart perspective, here's a balance range. Any pullback that holds $400.75 as a higher low is trying to make an attempt for bullish structure to resume. This is also indicative of the weekly higher low holding as well. All right, so any moves that stay above $400.75, bulls have the edge. If we fall back down underneath, we will reevaluate, and it will truly be a look above and fail. We'll target the bottom end of the range, and we'll look for bearish outcomes from there. But as of right now, with the pre-market gap up, that is not a high probability outcome. Okay, so that's your SPY. Those are the numbers. Primary watches are just the numbers on the screen. 404.50, higher lows above $400.75. Anything that breaks and violates here, we will reevaluate. Next up, QQQ, NASDAQ 100 from the ETF perspective. What's going on with this one? Gap up is in play, right? No doubt about that. This is a little bit more firmly, as we said, depending on how you want to split the range, inside of the larger one or getting into the midpoint here. But undoubtedly above this range. So just like in the SPY and the ES, that higher low pullback wants to be above the top prior rejection points there. In a picture perfect world, it's 297.75, right? And that's not just because it's the prior lows from here, here, and here. It's not because it's the highs. It's not because it's the higher level. It's because if we look at the 30-minute time frame chart here on the right-hand side of the screen, notice that that's a retest of the breakout point, right? You could make the argument that 296.50 is also equally as important. That's where the pullback held. But if we're making higher lows and higher highs, then you really want to see prior resistance turn into new support, right? So 297.75. 297.75 is the ideal pullback level for the QQQ. If we get something that looks like this, daily chart remains in flux back to the upside. It'll be more constructive when we can get back above 302.75. Don't get me wrong, but this higher low is very meaningful if it can hold. All right, bears will have some traction if we get underneath this time around 296.50. It's got to break the bottom of this pullback, right? That would give us a lower low on at least the 30-minute time frame chart. So QQQ levels, very clear based on what took place from Friday on a smaller time frame chart. 296.50 is must hold support, ideal hold for the higher low, 297.75. Next up, we've got IWM Russell 2000 and the small caps. What's going on with our risk barometer here? As you can see, once again, there's your neutrality. There's your higher low. We're more firmly inside of this as an overhead range, right? Higher low pullbacks. Very clearly want to hold 189.75. In an ideal picture perfect world, just like we discussed on the Russell futures, we just hold the overnight low, which is 191.20. 191.20 in your IWM. If you're looking over at your market minder window throughout the course of the day and we're above 191.20, right? Did I just say 10? 191.10, 191.20, whatever. 191.20, as long as we're above that, you look over at your market minder window and last is printing above, then there's no real reason to be aggressively short. If we start breaking down underneath, I will completely concede, yes, there's an intraday short scalp for the back test, break, retest, and possibly higher low off of 189.75. The short would be underneath this, through the thin structure, retargets the pullback here. Okay, so that's how I would trade the IWM. That's how I would use it on today's session. We've got 9:16 on the clock. We're about to blast through the core list of companies, see what's setting up here. Apple was in the headlines big time this morning, getting an upgrade as well from who was it? Someone correct me in the chat if I'm wrong. I thought it was Goldman. Was it Goldman? I don't know. We'll leave it at Goldman. Regardless, big gap up here in Apple. Are you chasing the long? No. Please do not chase the long in Apple. Reason being is that we're gapping into this overhead supply. So you're going to get all the traders who wanted out for break even here as they suffered through this pullback saying, oh, I want out. I want break even, and then I'll reassess if we can break the top of the flag. You get that, but you also get folks who are buying in because they're like, oh, goodness, big gap momentum on Apple. But once again, just like everything we've discussed so far, we've made a lower low. We are sitting at a brand new higher high in this newfound smaller time frame uptrend, like the 30-minute, right? Boom, boom, boom. You are entering at the worst possible trade location from a risk-reward perspective if you decide to go long here on the open. Just keep that in mind. I'm not saying you can't do it, but where do you put your stop? I don't know. So to me, it makes more sense to watch for a pullback, partial gap fill, full gap fill, 151 support. I would be more interested in being a buyer in Apple somewhere around one of these levels. All right, so watching for a pullback in Apple first and then identifying longs. If it does just continue, I'm going to let it float away like a balloon. It's the reality of the situation. I don't know where I could place a stop unless there's a very obvious intraday setup that forms, sometime, after a morning move. Could be 10:30, could be sometime before lunch or 2 o'clock and after, right? Just generally speaking about timeframes. It doesn't have to be at 2 o'clock. I'm not going long at Apple, long Apple at 2 o'clock. All right, let's not get it confused. Netflix, not really participating in the gap up momentum of the market this morning. Really neutral and sideways down here. Big H pattern on the daily time frame chart. Really being patient for shorts underneath 311. It's lost its momentum. It's lost the outperformance edge that it's had for quite some time here. It's definitely not looking great. You can start to make the argument for a weekly head and shoulders look here if we start getting more price acceptance under these lows. Again, 311 is the short in Netflix down towards 298. Tesla, what's going on with Tessie? Really resilient. We've talked about this. Bull flag consolidation is forming, more meaningful over 213. That's been the MO. This 197.50 level has been extremely important. Look at it in the pre-market. Look at it in the pullback from yesterday's session, Friday's session. The early morning resistance as well. It's obviously more bullish if we can spend time above 197.50. This level has acted like a magnet in Tesla for quite some time now. If we're above, bullish edge. If we're below, okay, starting to look for those lower high short entries back down to the lows of this range, 185-ish. Okay, 197.50, key pivot in Tesla. Next up, Google. A little bit of lift here pre-market. However, keep in mind what we discussed in the weekly watchers video, right? Head and shoulders pattern. We're still underneath 94.25. Here's 94.25. We are underneath that level, really favoring shorts underneath because we're underneath the neckline of a bearish pattern. If we get above, we will reevaluate on the long side if we get a higher low here. But as of right now, still looking for the strong lower high in a name like Google specifically from this trend count perspective. Not nearly as meaningful of a reversal out of this balance area down here. The structure is not the same as what we see in something like SPY or even the Qs, right? Next up is Zuckerberg's Fantasyland continuing to blast off on those headlines about TikTok and the furthered push for a ban here across, I think it was the Senate they mentioned, or some legal entity in the government, right? Regardless, Meta pushing higher, just like Apple, very difficult to chase this on a long. You want to see some kind of pullback for a gap fill reversal long. You want to see a pullback that holds kind of support from in here. That would be 183.50. It's a really sloppy line, but if I do this, you can see that's much sharper. 183.50 pullback is reasonable as well. So Meta watching for the pullback. If it does decide to continue, you could make the argument for a short off of this. Reason being is that we're just in this range. Probably needs to see, this if it's going to be more constructive in the upward direction. If it does just take it out, at least you'll have a tight stop. At least you'll have a tight stop, right? If you start to see that, I'm not saying just blindly short it here, but if you start to see the signs of weakness, inverted hammer, double top, intraday, 15-minute chart, 5-minute chart, head and shoulders pattern, right? And it's reasonable to think short underneath that pattern and look for the gap to fill. It's reasonable to think that we might get that 183 pullback, 183.50, and then your stop goes here, right? So the risk reward is much more favorable as a short up here as opposed to a long. All right, that's Meta. Next up, NVIDIA. What's going on with NVIDIA? Definitely more bullish than bearish. Obviously holding the top of the range here, getting back above 229, look below and fail, went right to the top of the range, looking for a break in the upward direction. This is coming out of a balance area, and we're not overly extended on the gap up this morning. As a matter of fact, it's not a gap. It's right on the close. So I would be willing to look for NVIDIA continuation here, just because it's a range. The sellers absolutely got screwed in the gap, and now we're right back at the top. So anyone who is short NVIDIA is going to get squeezed as we get more acceptance above 238.25. And with this open up here towards the highs, again, any excuse for a higher low pullback and then a break back above this level, any continuation that then pulls back to VWAP for a higher low, looking to play NVIDIA on the long side for those psychological reasons. If we get a deeper move into the prior day's range, the key support that must hold is 234. It's kind of the midpoint of this range, right? And that would keep us bullish on the daily structure. Obviously, getting there implies downward pressure. I would not be a short. I would not look to participate on that move short. I would rather short something else like Meta if the market's going to come down, right? So anyways, that is that. Next up, Softy, because we are getting close on time here, 9:22 on the clock. This isn't in an interesting place as well. Just noting that we are still technically, as of Friday's close, underneath, getting a little bit above as of the open here this morning. This is confusing. We talked about the lack of clarity in Microsoft on the weekend video, and nothing has really changed. For more clarity in the upward direction, it's got to be a higher low, break and retest above 255. This is just too concerning as an overhead supply with the strong sell side momentum there, the unfilled gap. I mean, it's just not clear to the upside. It's not clear that the bulls are going to run away with this. If we do get a pullback that holds and goes, great. Trade it in the long direction with a stop here. But it wouldn't be my first choice for a long. I would much rather trade NVIDIA on the upside, right? Next up, we've got Amazon, last but not least, the mini beast, same idea as Google. It's been almost not a mirror image, but fairly close. Head and shoulders, still underneath the neckline, getting a little bit of lift over that little breakout point here from the daily at 94.70, still looking for lower highs underneath 96, right? That keeps our big trend intact like such. Equal high, lower high, however you want to call it. We're coming off of a lower low, so we can afford that than this, okay? So that's it. That is the core list of companies. Overall, it's pretty noteworthy that a lot of these things are still in tricky positions to trade to the long side. I'd probably favor, if we're looking at longs, just the ES on a pullback first, the NQ on a pullback first. The main thing that I would want you to know before I tune out for this morning's session is don't be the person who buys a higher high and gets trapped in a pullback. Be mindful of the higher high. Be mindful of your trade location. Don't get suckered in. Don't get FOMO, right? If it goes, it goes. We know that we need to be patient. We need to wait for a pullback to VWAP. We need to wait for some structure to build out. If it just goes, let it go. Let it go. If you get in the habit of chasing those things, one day it's going to blow up. Might work out today, might work out tomorrow, but there's going to be one time it doesn't work out, and you've reinforced such a bad habit. You're not willing to let it go. You're not willing to take that loss, and next thing you know, there goes your account. So you choose the sacrifice. You choose the difficulty. Right? Do you want to choose the difficulty of staying disciplined, or do you want to choose the difficulty down the line of blowing up your trading account? Choice is yours. All right. that is that. Thanks everybody for tuning in. I truly wish every single one of you a green trading day. If you're not in the Discord already, join the Discord. It is linked down below in the description, or you can type in that URL. It is just a redirect link. It is not there's no charge there. There's no upsell. There's no credit card, nothing. Join the Discord, just a redirect link. That way I don't have to remember the weird extension from discord.gg/M lower blah, 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 blah. It's too much. So there's a redirect link for you. All right. That's going to wrap it up. Appreciate everybody being here. On your way out, do me a favor, hit the thumbs up button, and I wish you all a green trading day. I will see you in the next one.